Along with that, I'll request you quickly copy the link of this session, share it with your friends so that more and more students, they can join us live in this particular session. So let's begin the discussion, guys, without any further delay. So first of all, obviously, you all know that RBI has appointed the new governor after the completion of 6 years tenure of Shakti Kanta Dasji. We will be discussing about that appointment. Then we will be discussing about the latest initiative taken by RBI. Moving ahead, we will be discussing some of the initiatives taken by SEBI as well. So let's begin the discussion with the first news. But before that, I have a very important information to share. Guys, if you are preparing for regulatory bodies exam, then current affairs is going to play a really very important role, and we brings to you weekly PIB analysis, weekly finance current affairs, weekly RBI current affairs, weekly government schemes updates, weekly ESI current affairs, as well as we come up with weekly important reports as well. So you must follow all these sessions Monday to Saturday at 6 p.m. by all the experienced faculty members so that you can utilize each and every content which is delivered to you, which will help you a lot in order to grow and clear your upcoming examination. So let's begin the discussion. If you want to download the PDF of this particular session, that will be available on my Telegram channel. My handle is @Madhav Arora and the channel name is Economics by Madhav Arora. So let's begin with the first news of the day and the most important news of this year, I would say. So in December itself, government has given one of the important update, and this update is going to be asked in upcoming examinations a number of times. So the news is RBI has appointed new governor, and the new governor who has been appointed is Sanjay Malhotra. First of all, so Sanjay Malhotra is the 26th governor of RBI, and Sanjay Malhotra has replaced whom? So Sanjay Malhotra has replaced Shakti Kanta Dasji. We all know that Shakti Kanta Dasji was the 25th governor of RBI, was the 25th governor of RBI, and he was appointed in 2018. So he was appointed for 3 years. He served till 2021. Then he was again or reappointed for 3 more years till 2024. So he has served RBI as a governor for 6 years. With this service completion, Shaktikanta Dasji has become the second longest. This is very important. Shaktikanta Dasji has become second longest served governor of RBI. Till date, we have B.R. Rao, who has served RBI as a governor for almost 7 years and 6 months. After that, we have many others who have served for more than 5 years. But on the second rank, now we have Shaktikanta Dasji, who has served as RBI governor for 6 long years. Now he has been replaced by Sanjay Malhotra. Who is Sanjay Malhotra? So Sanjay Malhotra was currently serving as the Revenue Secretary of India, and he has completed his graduation from IIT Kanpur. Then he went to US and he completed his master's from Princeton University. Then he joined as IS officer 1990 batch, and after that he was promoted to different government important positions, and now he has been promoted or he has been appointed as the RBI governor. The question is, so who is responsible for the appointment of RBI governor? So the appointment of RBI governor is done by the Appointments Committee of the Cabinet, which is headed by Prime Minister along with the members, and the member is Home Minister of the country, that is Mr. Amit Shah. And the Honorable Prime Minister Narendra Modi ji has appointed Sanjay Malhotra for the tenure of next 3 years. So let's try to understand more on the same, and I'm pretty sure you are going to get many new updates on the same. So let's begin the discussion. Just give me a second, guys. Let's begin the discussion without any further delay. Sanjay Malhotra has been appointed as the 26th governor of RBI. He is the Revenue Secretary of India. He's 1990 batch IS officer from Rajasthan cadre. He succeeded Shaktikanta Dasji, whose tenure has completed today itself, that is on 10th of December 2024. So Sanjay Malhotra has a decades of experience spanning from finance as well as taxation, power, IT, along with mining. Now, if I talk about his academic credentials, as I already said, he has completed his graduation. He is basically an engineer. He completed computer science engineering from IIT Kanpur and masters in public policy from Princeton University, US. If I talk about the government roles, he is serving as the Revenue Secretary of India since December 2022. He has drove n number of tax related policies, not only for direct but also for the indirect taxes, which has contributed a lot to, I would say, which has contributed a lot to increase or to better for the betterment of the financial health of the nation. Moving to the next point, previously he was the secretary in the Department of Financial Services, where he has overseen India's financial and banking sector. During his tenure as chairman and managing director of REC Limited, he has led the growth in the power sector as well. So which means he has an experience in the power sector. He has an experience related to the financial and banking sector because he was the secretary in the Department of Financial Services and he has served as the revenue secretary, which means he has a good insights related to the taxation policies of the country. Now, if I talk about his key contributions, taxation and fiscal policy has played a very important role in enhancing the tax collection as well as managing the GST framework, balancing state and national fiscal priorities at ex officio secretary to the GST Council. So he has served as the ex officio secretary to the GST Council. Now the question is, now a very important question to everyone, who is the ex officio? Who is the ex officio secretary? Who is the ex officio secretary of GST Council? Any idea, guys? What do you understand by the word ex officio? So ex officio means the position for which appointment is not done. Rather, the one who is holding any other position will automatically serve as that position. For example, if I talk about in the concerned discussion, the Revenue Secretary of India will be the ex officio secretary of GST Council. So while he was the Revenue Secretary of India, he has also served as the secretary to the GST Council because it is an ex officio post, which means whosoever is going to be the Revenue Secretary of India will be the ex officio or will be the secretary of GST Council of the country. If I talk about his policy reforms, he has shaped critical policies in power sector, mining sector as well as IT sector, not only at state level but also at the central level, where he has demonstrated his strong analytical and leadership capabilities and qualities, which will undoubtedly help the economy to grow while he will be serving as the RBI governor. So Shaktikanta Dasji has served as RBI governor from December 2018 till 2021. He has completed his tenure of 3 years. Then he was reappointed for a tenure of 3 years again. Now he has completed 6 years as RBI governor and now he is replaced by Sanjay Malhotra. One more thing I would like to add over here, which is really very important. Most of you must not be knowing it. If someone asks you, what is the tenure of RBI governor? Then your answer should be, according to RBI Act 1934, the tenure of RBI governor is up to 5 years. But decided by government. Please make sure you know this point very well. But decided by government at the time of appointment. Which means government can make an appointment for maybe 3 years, 4 years, but up to 5 years. The appointment cannot be made for more than 5 years because according to the RBI Act 1934, the tenure of not only RBI governor but also the tenure of RBI deputy governor is up to 5 years. Is it clear, everyone? Is it clear? Who is responsible for the appointments? An appointment is done by the Government of India. To be very specific, so the appointment is done by the Appointments Committee of the Cabinet, which is headed by Honorable Prime Minister of India, currently Narendra Modi ji, who has basically finalized the name that yes, from 11th of December 2024, India's central bank will be headed by none other than 1990 batch IS officer from Rajasthan cadre. The name is Sanjay Malhotra. Is it clear, everyone? This is the entire news which you need to remember. Moving on to the second news of the day. The second news talks about FCNR deposits. Now the first question is, so what do you understand by this particular term, that is FCNR? I don't know how many of you have heard this term, but this is a really very important term which you need to understand, and basically what these are. So these are basically the deposit accounts. These are basically the deposit accounts. Now, as you all know, you and me, we can open up deposit accounts in the bank, and whenever we are opening, we means we as the resident of the country, we open the deposit accounts with the bank in Indian currency, that is in Indian rupees. But there is a provision that the Indian residents who are involved in export and import business, they can also open up an account with the banks, or with the, I would say, authorized dealer category 1, which is termed as EEFC accounts, which is basically termed as EEFC account, and these accounts are basically known as exchange earners foreign currency account, where the importers and exporters, they can get the credit and they can make the debit of their funds in foreign currency itself, in order to avoid exchange rate risk, as well as to avoid the exchange rate charges or exchange of currency charges. But if an individual who is Indian citizen but residing outside India, will be termed as NRI, non-resident Indian. So the non-resident Indian being staying outside India, they can open up deposit accounts in India, not only in Indian rupees but also in the foreign currency. So in the same list, we have one more type of account that is known as FCNR. FCNR stands for foreign currency. FCNR stands for foreign currency non-resident account. Foreign currency non-resident account is basically fixed deposit account. It is basically fixed deposit accounts. That means you can only open up FD account. You can only open up FD in case of FCNR account. The second point is, this account is open up. This account is opened up by the non-residents of India. It is opened up by the non-residents of India, where the non-residents, they invest their foreign currency. That means these accounts are allowed to deposit the funds only in the foreign currency, and that too there are 6 foreign currencies which are prescribed for under which you are allowed to open up these fixed deposit accounts. So these I would say, so these 6 currencies are, so this include, first one, it includes US dollars. Second one, it includes euros. Along with euros, we have sterling pound. Then along with sterling pound, we have Australian dollars, we have Canadian dollars, and we have Japanese yen. So let's read about this particular news. So Reserve Bank of India, why this is in news? In order to increase, please pay attention, in order to increase the inflow of foreign currency, in order to increase the inflow of foreign currency in the form of fixed deposit accounts, in India, RBI has taken up an initiative related to the FCNR account, that is foreign currency non-resident account, which allows the depositor to deposit their funds only and only in fixed deposit format, and that too only and only in 6 prescribed currencies. These 6 currencies are really very important. I repeat them again. It is US dollars, then it is Australian dollars, then it is Canadian dollars, then we have Japanese yen, then we have euro, Along with euro, we have the last one, that is sterling pound. There is a very favorite question, that's a renminbi, that is yuan. Currency of China is one of the international currency, but FCNR accounts do not allow the depositors to deposit their funds in one of the international currency, that is the Chinese currency. So what is this news all about? So Reserve Bank of India has raised the interest rate ceilings on foreign currency non-resident bank deposit accounts to attract foreign capital inflows. With what it basically means, it means that if RBI is allowing the banks that they can offer higher rate of interest against the deposits under the FCNR account, it will attract more and more capital, more and more foreign currency inflow. And if the foreign currency inflow is increasing, our demand can be easily met. If the demand can be easily met with the availability of foreign currency in the country, undoubtedly we can easily tackle down the depreciation problem which we are witnessing related to the Indian rupees. However, the experts, they predict a limited impact. Experts says there is going to be a limited impact due to the availability of cheaper foreign currency funding option in the global market. So in the global market, there is more other opportunities, more other, I would say, availabilities where foreign currency can be raised at a cheaper rate. So this move is basically a part of broader measures where RBI is trying to stabilize rupee in context to foreign currency by increasing the dollar inflow. I hope you understand this point pretty well, as I have discussed in my previous sessions as well, and that to n number of times, that in India, exchange rate is decided on the basis of a method, we call it as managed floating rates. We call it as managed floating rates. And in case of managed floating rates, which basically means demand and supply of foreign currency, is basically the concept of deciding the exchange rate. And if demand increases with respect to supply, undoubtedly the price of foreign currency will increase. And if the price of foreign currency is increasing with respect to the Indian currency, this means Indian currency, that is Indian rupees, is depreciating. In order to stabilize the Indian rupees, in order to counter this depreciation of Indian rupees, there is a solution, and the solution is RBI. RBI come in the picture. RBI sell dollars against rupees so that RBI can increase the flow of foreign currency in the economy, which can easily match the increased demand, and the further depreciation of currency can be controlled. Now in this case, there is one more point which we need to understand. The point says, not only this, the current move where RBI has allowed the banks that they can provide high interest rates to the deposits, high interest rates on the deposits, on these FCNR deposit, in order to attract more and more foreign currency inflow. So this is the move which has been witnessed recently. If I talk about the key challenges which were faced earlier, then my answer is banks now they can offer rates up to the overnight alternative reference rate plus 400 basis point. 400 basis point means that is plus 4% for the deposit of 1 to less than 3 years, and in case of deposits more than 3 to 5 years, it's going to be 500 basis point, that is 5%. Now, before I move ahead, we must understand a term, that what is the meaning of alternative reference rate. How many of you have heard this term, alternative reference rate? Please reply in the comment section if you have ever heard about this particular term, that is alternative reference rate. If someone asks you what is the meaning of alternative reference rate, then my answer to this particular question would be alternative reference rates. Banks, they banks can choose rates from a basket of currencies instead of British pound for international financial transactions, that is basically related to ARR. So alternative reference rates are basically the rates, are basically the rates alternative reference rates are basically the benchmark interest rate that replaces the prevailing interest rate benchmark. So ARR are used to calculate other interest rates, such as they are used to calculate the interest rate for borrowings and derivative financial instruments. ARR was introduced back in 2012 to replace the interbank offer rate. So it was introduced in 2012 in order to replace interbank offer rates. Interbank offer rates, which are the interest rate based on the bank's quotes for borrowing money from each other. So the transition from interbank offer rate to ARR is being driven by regulators around the world, including Federal Reserves, including Bank of England, as well as RBI. So ARR are considered more reliable and robust interest rate benchmark in comparison to, we use LIBOR, that is London Interbank Offer Rate, and now London Interbank Offer Rate or Interbank Offer Rate has been replaced by ARR, that is alternative reference rate. So whatsoever is the alternative reference rate, banks are allowed to offer 4% up to 4% more against the deposits or the fixed deposits done for 1 to 3 years. And if the fixed deposit is done for more than 3 years, then banks can offer a range of ARR plus 5%. If I talk about the earlier criteria, so the earlier criteria was ARR. Earlier criteria was ARR plus 2.5%. Earlier criteria in case of 3 to 5 years was ARR plus 3.5%. If you check it clearly, we can say that as a whole, RBI has increased 150 basis point interest rate. 150 basis point interest rate on what? So 150 basis point interest rate on FCNR, but that means it is basically the range which has been expanded, and banks they can utilize accordingly. So this offer is valid till 31st March 2025. So the deposits which are going to be received by the bank till 31st March 2025, banks are allowed to offer the interest rate, that is ARR plus 4%, 1 to 3 years, ARR plus 5%, 3 to 5%. Now, if I talk about the inflow data, during April to September 2024, foreign currency non-resident bank deposits attracted $5.34 billion compared to $1.92 billion in the last year's period, which means this is becoming one of the, I would say, fastest growing foreign currency inflow destination in the country. Outstanding amount, the total outstanding in these accounts is around $31.08 billion. Outstanding means this is the total deposit which India is having under FCNR. Why I say it's outstanding? Because it is basically the liability on the government. It is basically the liability on the nation, because nation has to pay back these deposits whenever they are going to mature along with the interest rate. So competitive global rates. What are the challenges? So first is competitive global rate. Domestic banks, they prefer raising funds from global market because they are present or they are available at cheaper rate in comparison to FCNR deposit. So they won't be much attracted, or the banks won't be much attracted towards FCNR deposits. Minimal impact. According to experts, the revised rates are unlikely to significantly increase dollar inflow as existing rates are already below the ceiling. Last is sentimental boost. While the measure offers an additional funding avenue, its actual impact depends on the market condition and rate differentials. That means the difference of deposit rates which are offered in the other countries. If yes, these rates are pretty high in comparison to the other nations, then we can expect huge inflow of foreign currency. Then there is a term SORR benchmark. RBI has proposed new secured overnight rupee rate for improving the interest rate benchmark. Are you aware of this? RBI has introduced a new term RBI has introduced a new term, that is SORR. Any idea, guys? Any idea? SORR, which stands for secured overnight, rupee rate, secured overnight rupee rate. Any idea? Have you heard this point? Do reply in the comment section with yes or no. Basically, what is it? Sir, it is a benchmark based on secured money market. So what is it? It will be based on secured money market transactions in both the market repo and tri-party repo or TREP segments. So central bank has not given any timeline for establishing this benchmark, but yes, they have asked the Financial Benchmark India Limited to take the proposal forward. So this is really very important. If someone asks you what you must know about SORR, so RBI in its December monetary policy committee has announced the introduction of secured overnight rupee rate, and RBI is aiming of developing it as benchmark based on the secured money market. So the new benchmark was announced after examining the recommendations of the committee as well as the feedback which was received from the panel on Mumbai Interbank Offer Rate or MIBOR. So if you are aware of this, then it's fine. Otherwise, you need to understand this in much detail. So I'll help you to understand. SORR is a benchmark which is based on secured money market. It is based on secured money market. It is based on secured money market. What is it? Sir, it will be based on secured money market transactions in both market repo and tri-party repo or TREP segments. So central bank has not given any timeline, but yes, it will be introduced in the near future. What is the advantage? So this benchmark will be better suited for the interest rate derivatives market because the rate will be calculated from trade executed in the basket repo and TREP components. So these segments account for 98% of the overnight money market volume, and it include participation from the other institutions such as NBFCs. That is the reason it will be a better option. In MIBOR, the rates were calculated based on the trades in call money market or the rate at which bank borrows or bank lend to each other on daily basis. So expert says it could be better. It could be better if we come up with some other rate which involve or which has a broader perspective. So experts has also said that introduction of SORR is expected to lead to better price discovery in the interest rate derivative market, and it will bring more transparency into the economy. So that is the recent initiative which has been taken. Then we have collateral free loans. Limit for agriculture loan have been increased from 1.6 to 2 lakhs, aiding small and marginal farmers, as well as RBI will establish a committee for a responsible AI framework and has introduced an AI-based fraud detection tool that is known as Mule Hunter. So remember this name, Mule Hunter. Remember this name, Mule Hunter is one of the important tool which has been introduced. This is the RBI's initiative in the AI domain. Then we have collateral free loan announced by RBI related to the agriculture sector, and last is the latest introduction of SORR in the latest monetary policy which was presented in December 2024. Got it, guys? Moving on to the last news of the day. The last news talks about SEBI. So if I talk about SEBI, we'll not talk much. We'll just focus on the required areas. SEBI SDP recognition for digital platform is voluntary. What is it? First of all, we must understand what is this SDP. So SDP stands for Specified Digital Platform. SDP stands for Specified Digital Platform. So SEBI has clarified that digital platforms are not obligated that they should register as specified digital platform. The framework aims to simplify compliance for regulated entities while ensuring flexibility for digital platforms. So this framework is basically to simplify compliance for the regulated entities as well as ensure flexibility for digital platforms. So SEBI has emphasized that preventive measures for special digital platforms recognition, this is voluntary and there is no regulatory framework governing the SDP. So if a digital platforms, they want to register them as a specified digital platform, it's fine, they can do that. Otherwise, they should do it voluntarily. There is no hard and fast rule that they should or they are legally binded to do the same. So remember that SEBI introduced SDP framework as a part of its compliance strategy to prevent misuse of digital platform in areas such as unauthorized investment advice, stock market manipulation. So while regulated entities must avoid association with unregistered entities, partnerships via special digital platform offers compliance exemptions. So SEBI clarification comes and it has given very clear norm that yes, if a digital platform wants to register them as a special digital platform, then it is going to be voluntary. There is no hard and fast rule. So voluntary recognition means platforms are free to choose SDP recognition. No direct regulation has been introduced by SEBI related to SDP, but yes, mandates related to the regulated entities should be completed. Simplified compliance for the regulated entities, which says associating with special digital platform will ensure compliance with regulations like regulation of section 16A of SEBI intermediaries, regulation of 44B of SECC and many other instruments which have been allowed. Last is SEBI has also come up with the term that if a regulated entity is tying up with the special digital platforms, they should fulfill or they should complete the compliance, but every digital platform should be registered as a special digital platform. That is not required. That should be done on voluntary basis. Is it clear, everyone? So if you want to learn more about these kind of financial updates, then I have a solution for you, and the solution is RBI Grade B Lakshya Batch. With the immense success of RBI Grade B Lakshya Batch 1.0, we have launched 2.0 batch, and the classes are live from today itself, that is 10th of December 2024. If you want to ensure your selection in 2025 itself, if you are going to complete your graduation by 2025 and you want to work with the one of the, I would say, prestigious organization of the country, that is RBI, you must subscribe to this batch in order to enjoy the 100% selection benefits. In this particular batch, we will help you to prepare for phase 1 along with phase 2 as well as interview stage, which means we will hold your hand from day 1 till you are selected as an RBI Grade B officer, till the time you start your job with RBI. In this particular batch, we offers you 550 plus live classes, 220 plus mock test, one-to-one mentorship, and very important descriptive answer writing, where you will be enjoying the actual examination experience related to the descriptive answer writing, which is not available on any other platform in the market. So do subscribe to this particular course, and with the subscription, you will not be only enjoying this batch, you will get access to our crash courses, our revision courses, our current affair courses, and many more, so that you can clear your examination in the very first attempt itself. So thank you so much for joining, guys. You can download the PDF from my Telegram channel. My handle is @Madhav Arora. Do not forget to share the link of this session with your friends, and do like the session, subscribe the channel if you're watching it for the very first time. Good luck, guys. See you soon. God bless you all. Thank you.